IT and banks. So it's going to be all eyes on IT, Reema, from here on. And the street would want to hope that the positive momentum can continue. And at least the IT guys don't disappoint. What are you now picking up?
Well, so the first number which will be out will be TCS on 12th of April. That's next Friday. And that kickstarts the earnings season, right? Start of a new year, come April, and all the, brokerage preview notes start pouring in. So we got about 5 of them this morning. So we've got Kotak, Jefferies, Morgan Stanley, MK, and JM Financial on the IT expectations. So I thought that since, the big focus is going to be on IT and the number, the guidance for FY25, it's not going to be about the March quarter. That's done and dusted. So I said, let's just quickly at least put out the, numbers for next year. And that is the number on your screen. As you can see, for Infi, on an average, the street is expecting about a 2 to 6% growth. 2% at the lower end, 6% at the upper end. This is FY25 constant currency revenue growth. For HCLTech, the street expectations vary from 4% at the lower end, going up to 8% at the upper end. So these are the broad numbers in terms of expectations. There you have the broad range for Infi, 2 to 6%. For HCLTech, it's 4 to 8%. What are brokerages saying? Kotak says expect an improvement. FY25 is better than FY24, but not enough, not encouraging enough. They've lowered their revenue estimates across the board by 0 to 3%. And just to illustrate that point, this is Kotak's estimates for Infi. So earlier, they were expecting a 6.6% revenue growth for FY25. That's been brought down to 5%. For FY26, that second number should be FY26, they were closer to 10% and now they're down to 8.7%. So basically, after the Accenture disappointment and the way this quarter has panned out with no material improvement in demand, brokerages have lowered their revenue forecast. Jefferies says, even after, currently the market expectations are higher than what the companies are likely to report, and therefore we could see earnings cuts. Morgan Stanley has already cut EPS estimates by 2 to 11% ahead of the numbers, but they have upgraded in HCLTech to an overweight. And the reason is that amongst the lot, they believe HCLTech offers you better visibility. And you saw that comparison in Infi and HCLTech. Infi was a 2 to 6% guidance, and for HCLTech, it could go as high up, as 6 to 8% too. JM Financial believes that, when the guidance comes out, there is a possibility of a correction, and that might provide a good entry opportunity. A quick word on the top picks, from these brokerages. Infi was the one where we saw, successive revenue downgrades through the course of FY24. Even for next year, it's not that the street is expecting, great shakes, right? Big growth numbers.
It's 2 to 6%.
It's 2 to 6%. But yet, Infi comes up as the top pick for Kotak. It comes up as the top pick, one of the top picks for Morgan Stanley, and it's also the top pick for Jefferies. So, I just want to put that out on the board that, brokerages are still betting on Infi. And as you can see, a large cap is, quite the flavor still.
Absolutely. And I think, again,